This is Justin Pulitzer. This is my midweek video for Wednesday, November 12th, 2025. Wow, the year is really winding down. I cannot believe it's already November. There was actually frosties in New York, and I saw even, I think upstate, there was like a snowstorm. So this is getting real fast. All right, a good amount of material to cover. Some of it we've covered in some other videos, but I have, of course, some new takes on it. Hot takes, if you will. And as far as sentiment goes, coming into this week, it was a pretty big improvement 63%, 30% bears, 7% on the sidelines. I noticed the CNN gauge, though, was significantly worse. They dipped down into the extreme fear. Now they're just fearful. So markets are basically near all time highs. Where's the euphoria? We're not anywhere near extreme greed. Just is what it is. And I think a lot of this is being suppressed by ideological political views. We're not a political show, but when it impacts markets, I have to comment on it. We saw something unique in the last couple of weeks. By the way, when we had the big up moves, remember Fridays would see sell offs, and then in down markets, often Fridays see rebounds for short covering. So I think that started out Friday, and then the deal, or the presumed deal, we should say, although I do think it's going to happen, to reopen the government pushed that into a extended rally on Monday. And you'll see, price held really just at like channel lows and 50 MAs and retests to breakouts. I thought it was a healthy breakout, healthy breakout, healthy pullback. I had put in that meme joke, is this a pullback for ants, this Zoolander. And sure enough, that proved to be right pretty quickly. And that was still in the thick of things. People were pretty worried at the time. But for me, I was watching, the markets, and I've watched price action for years. I mean, I've had a brokerage account since I'm 18. Oh my God, I can't even believe 47 now. So it's been a minute, huh? I've been at it for a while. Anyhow, moving right along. So we had the Friday bounce after the down week. Of course, we know we have a year stay in the trade war with China, so that delays things with China a year, which gives us a opportunity to make deals for rare earths and magnets and all that stuff. In the meantime, I told you the government shutdown seems like it's going to end. We still have the hawkish Fed, but is Powell just trying to talk tough because we're still at a 65.4% probability that they're cutting rates in December, and we're 28 days out. So yeah, a lot can change in 28 days. A lot can change in 28 minutes in this market. So yeah, there's that. The earnings reactions have been dicey, to say the least. We've seen flops that keep flopping and pops that pull back, that give up all the gains. So it's has not been an amazing earnings season, to say the least. Some people have noticed. Michael Burry, for one, he owns a lot of puts apparently in Palantir and NVIDIA. Today we got the news, Masa-san, SoftBank, they sold their entire stake apparently of NVIDIA. Now, does that necessarily is that a harbinger for bad things? I don't know. I don't know. It does seem like Oracle might have overextended themselves a little bit, and maybe that's the reason for the pullback. But SoftBank has a little bit of a spotty track record, to say the least. Maybe you want to see the we crashed about the WeWork, but I think that they were needed to raise some money. Made some sense that we were into some key areas for the stock. I'll show you on the chart where I think they got out, and I think I had been talking about this with either you guys or some of my subscribers. I have some DM subscribers and who I do phone calls with. By the way, if you're interested in that service, just message me. We'll set it up. You can message me throughout the day with questions, and I get back to you, of course, in a timely fashion. And some take it up a notch where we do phone calls and we talk about specific things in the markets, portfolios, and I get a lot of positive feedback about that. The only problem is there's only one of me, and there's only so many hours in the day, and I have international clients. You'd be amazingly shocked to hear about the times a day I'm on the phone with people talking about markets. Yeah, I mean, even in the oil market, I have some very interesting contacts, people who want to talk to me about that because, the charting and all that. So, yep, there's that. things I see as very big positives coming for the market. One, we have the big beautiful bill, and a lot of people are still paying estimated, I mean, everyone really is still paying estimated taxes on the old tax regime, and they will be getting very large tax refunds in the first quarter, per Secretary Bessent, the Treasury Secretary Bessent. He's also right now head of the IRS, so obviously he knows these things. I also am interested in this tariff dividend that President Trump is talking about paying. Number one, if that is issued, that's going to be almost impossible for SCOTUS to unravel. And I am very curious to hear what they are going to do with the tariffs. The feeling had been that they were going to rubber stamp it. Now it's that they're going to strike it down. Some people say they think it's going to be reined in a little bit. I mean, I've looked at the law. It seems very clear to me that the president is well within his authority. If he wasn't, I tell you, I will, I'm not on the Supreme Court, so I can't give you how they'll come down on things. They're not always to the letter of the law. It's sort of more of the ideological breakdown these days. But as far as I can see, he's well within the rights, and they should uphold the tariffs. But what they should do and what they will do are two separate things. As far as the VIX goes, we had this big spike up. We stalled right where we were supposed to at the 22 to 22.51, and we are getting this pullback. And the bulls really need to get the VIX back below the 1724, and if they do that, 1623 would line up with the channel, or I should say the new trend line. We're not in a channel yet, but we are starting to make some higher lows, so higher lows and lower highs, so it's not exactly all out bearish. But, could we have another scare before the end of the year? I kind of think this might have been it, but you never know, right? We live in interesting, what's the what's the fortune cookie? May you live in interesting times. Yeah, that's always it's always a barrel of laughs, right? So as far as TNX goes, we are still kind of deciding. They have it over 4081, but they haven't checked back to the prior breakdown, which was 4188 up to 4205. We did get that check back here on 925. And then since it, pulled back down here, I said it was looking like look below and fails and boom up. This lines up very well with the 100 MA and the downtrend. So if there is a press up in rates, it may stall out there. Back below the 4081, it could hit the 20 MA, which is now upward sloping. 4046. I still think Fed's cutting, and I think Powell is posturing, but we'll see. As far as TLT goes, now this is still interesting to me, possibly for still higher prices. I told you up here, be careful for a pullback and to maybe target the gap fill, which we got at 89.18. Why was I bullish up to here? Because rates have the last 2 and now 3 times have lowered into the Fed, meaning bonds have rallied, and then after the Fed cuts rates, they seem to go up. Sell the news. Held channel low and now seemingly percolating. I would think the next upside target could be the 90.75, which is, of course, the 20 MA and the green channel, which is sort of mid-channel of the yellow channel. The guy behind the guy, if you haven't seen Swingers, you know what I mean? So could this continue to pull back? I mean, the real key pass, don't pass line for me is this 88.44 to 88.69. As long as we're above that, I still think it's okay for the bulls, but obviously it's better still as close to or above $90 as possible. But yeah, TLT has been a bit of a mixed bag this year for sure. As far as the XLF goes, we have a trend break, but let's not get too excited just yet. 50 MA has been the key resistance. Now, that will need to clear and hold 53.19. We are trading a little above it in the overnight, so that's always nice. But after that, the next boss would be 53.49. So this was the old high from back here on 725 before all this choppiness. But it doesn't exactly scream bear market when you have the XLF rallying a bit. Now, if we get back below the 100 MA, I think there is a right or right out short, though. So anything below, I think, the Tuesday low of 52.88 could be a pullback play. Now we are starting to see some branching out. We'll talk about that in a bit. I noticed XBI and IBB starting to rally. Maybe we'll talk about that after oil. I'll pencil it in. JP Morgan. Now, here's the thing. We hit my 2.618 target at the 319 and we pulled back. So what now? We're kind of getting close to the channel higher at 321.95. By the way, there's a new channel I drew in. The old one was the yellow. I drew in a green one. So I don't mind booking some gains here. It would be the spot to do it. Pullbacks we have seen can get as much to or below the 295, which was the last earnings spike high, not the earnings from 10/14, but the one from 7/15. So that was the initial spike high, and we had moves above it, below it, recently moves below it, and then back up above have been the long. So we've also seen that with both 50 and 100 MA too. So that's also a thing. But up here, yeah, I don't mind trimming a little JPM, but JPM, along with stocks like Apple, are safe ones that money managers can go tell clients they own, and they're not going to get fired for owning them. I know, but it just kind of is how it is. Now, I was actually short a firm. I was long a firm. I booked it this day, and then I was short, and I covered it. I forget where I covered it exactly. It was somewhere in here. And then I had my override on and was a little nervous, I have to tell you, going into earnings. But I got relieved. I actually booked it a little early because the puts had worn down after this, the bleed out of volatility post earnings and the price rally. But we now have a situation we're stuck between 50 MA resistance. What is that? 77.92 and the 20 MA at 72.55. Now, I did a little something today near the close, and I did it small. It's not really that I'm bearish on a firm, because I'm not. I'm actually kind of a longer term, a firm bull. But I am cognizant of the fact that we do often see moves to the channel low after having gotten to the channel high. And the channel low, if it were to do it tomorrow, it likely will not, would be 49 bucks. So I filled a 60-55 1/2 put ratio in January. And I got it for even better than I was asking to fill it for, which means I'm probably going to have pressure on the stock and my position at some point. Just always seems to work that way, right? However, I may also do a call ratio where I'm playing for a retest of the 100-buck level. And I do think the channel, if we were to go up, would be respected at this point, 91, 92 if we were to do tomorrow. We're kind of mid-channel here. I wouldn't mind getting back into a firm lower and kind of doing the time warp again, because as I often say, traders do what works until it doesn't. And firm has been steady Eddie money for me for quite some time on that type of play. That one I do it with PayPal. Enbridge I do it with, but that sometimes takes a longer time. And then I have some other ones I F around with that. Apple is one I do quite frequently. I'm in the UNH one at the moment. We'll talk about that later in the video, but it's one I do. Anyway, as far as the dollar goes, a few things. I was bullish on the tech check back to the 100 MA. I said to get out up here near the channel high on 200 MA. So what now? We are pulling back to an interim key level, the 20 MA, and this 99.32 to 99.563. Could we pull back to the channel low? Absolutely. But if you notice, we're making higher lows and higher highs, and I ultimately think these pullbacks to the 20 MA and even to channel low at this point, I don't know about 100 MA, it may catch up, but those to me it's an accumulation trade. And I think by the summer, it will be up significantly higher. I could be wrong, but that's what I'm thinking and what I'm going to be playing. I have to kind of really get on a serious play for that, and I'll let you know when I do. The Bitcoin. All right, a few things. We pulled back quite a bit ways. We got back down to this 99,090 to 100,815 reference lows. These are sort of poorish, but we've seen a lot of bottoming tails there. It made sense that we bounced to the breakdown at 107,790, and then we had this pullback today, and then in the overnight we're kind of bouncing. It seems to me it's like red, green, green, red, green. I mean, we'll see where this plays out, but if it were to pull back to the channel low and we did it tomorrow, you're looking at 97,587 and maybe an overshoot to the 61.8 at 94,793. I like starting to accumulate this again into pullbacks because I think there could be end of year rally in the Bitcoin. This is a falling wedge pattern. And those of you who have, and it, by the way, coming from all-time highs. So could this, continue to bleed out a bit? Yeah, but when this breaks, it's going to run like a scalded chimp. So I would be interested in buying dips in Bitcoin still. Ether. Now, this also has traded interestingly and very technically. I love crypto. I love gold. I love currencies. I love all commodities because they basically are the purest of charts to trade. Now, we pulled back to the 50% fib and 200 MA confluence. We bounced roughly to the breakdown point. By the way, this was 3,064.60 to 3133.80, and we bounced right just shy of 36.85, and now we're pulling back. If we have another leg lower, meaning to the 61.8, this is where I'd be buying the dip at 27.21.5. It also lines up with the anchor VWAP. So this area is key. Could we retest the 200 MA? Maybe. I would feel better about this over the 20 MA as that's been resistant. So that's the must clear now for me at 37.27 to get the Mo Bros back in play. Gold is acting well, but do not, under any circumstances, let this get back below the 20 MA on you, currently 375.48. Now, we are over the 38.2. It's actually lagging gold GCs a little bit, but that's all right. What I have mentioned before, I like the break of the downtrend. I like that we were over the 10 MA. I had said I thought we would get to the 20 MA, and we did, and we exceeded it. So is this going to make a run for the gap? It's very possible. Usually what happens is you'll test into the gap, pull back, and then the next time it goes is the play for the gap fill. So we'll have to see if that plays out. I'm still not convinced we're going back to highs, but I think it's more bullish than bearish as long as we stay over the 20 MA and the 38.2. So you could use 376.61, the 38.2 as the must hold now. The next upside target's obviously 381.71, which is the 50% fib, probably a small trim. And then the 61.8, 386.81, you probably want to get more trimmed. Okay. EGDX. Remember, we're traders. We play for the meat of the move. The GDX got very close to the 85.33. We got 85.09, which is my whole card, the 85. And we pulled back aggressively here. We are now above the channel, above the 20 MA, and at the 50% fib, which is actually a little stronger than gold. It's very odd that these are leading gold. It's to me tells me that there's a lot of retail trading this. Next upside would be 78.61 to 70. What is this? 79.49. So this is the next upside range. If we lose I would say just use today's low of day at 74.95 as a stop. Anything below that, I think, could see a liquidation break. Probably back down to somewhere between the 50 and my guess is the 10 MA at 72.23. But as long as we're over this area, it seems all right to me, at least short term. The oil has been getting the bouncage because why not-age? I think this is back to being a bit of a global growth proxy. And until the Ukraine war ends, that it could continue like this. So a few things to note. As long as the 20 MA holds, dips seem to be viable at 59.86. The bulls will need to clear the 50 MA, and in a gap and go fashion would be even better. Over 60.70. If it does that, I think that there is an opportunity to at least fill up the pennant to 62.59. 62.92, and then I'm thinking it could get up to somewhere between the 200 MA at 64 77, and then this resistance band between 77.27 and 66.03. Now, if there's some technical pattern to pay attention to, we have a potential inverted head and shoulders and maybe cup and handle. If we took the inverted head and shoulders and we took it to its logical progression, 69.88 and then 74.18. If you want to do the calculation for the cup and handle, just take the dip and add it on. Take the width of the cup and add it on. So that's which basically comes to be the same way. The cup and handle patterns to me are a little. I don't love them, but they're. I mean, I shouldn't say I don't hate them. I don't mean I don't love them. I don't hate them, but they're always like a little, like they're a little iffy to me because they're never like they're very. I should say never. They're rarely pretty patterns. Moving along, XLE also kind of leading the way. It seems again retail. I like this. We had talked about this. Anything over 88.97 to 88.43, I thought could get us back up to the 92.91, and we're very close. So probably want to be trimming up there. Yeah, but the big question is, are we going to fill in the 4-2 gap to 94.13 and make the full Monty up to 95.59? It wouldn't surprise me, but shorter term, there could be a dip. As long as we hold this 88.97 to 89.43 now, I think you could buy the dips. And if you want to sell some puts or put bull put spreads or buy some call spreads or do both, I don't mind it because I've told you the beginning of the year is often bullish for oil. So maybe use January or even February expiration. XBI, not one we've talked about lately, but maybe we should be talking about it more. Kind of almost a Maribozu candle today. Wouldn't surprise me to see a little dubstepper tomorrow, but if we do keep going, the 50% fib from the high would be 118.29, and the progression line is 118.85. So it seems to me like this may have a little bit further to go. IBB also seemingly playing some ship's mast here. Deep cut there for Death Proof. Anything that can hold over 161.73 to me now is bullish. Back below, probably stop out. That's the 78.6. And as long as we're over 78.6, we could target 177.37. Now, anything back below 161.73 could target a check back to 149.45, which is the breakout between that 149.45 and 150.57. And it lines up very nicely with the 50 MA at the moment. So, yeah. All right, so we're going to talk about the ES and the NQ first, but of course, I'm pulling up SPY because I'm a SPY kind of guy. All right, a few things to note. One is we got my 2 times range and 61.8 kind of confluence. We actually even overshot it. We had talked about getting down to the 2 times range, seeing a bounce. We didn't quite get the move up to the neckline here, but we did get a fairly decent bounce, and then we got the 61.8, and that's what I said I thought would happen. Now, we are over the neckline. Anything over 68.51 to me remains bullish. If we have a pullback, that is the must hold. It would also roughly repair today's rich close. So keep that area in mind. After this, the next upside resistance are obviously 6,900 and then 69.09 to 69.18 half. And then, of course, a run at the all-time highs at 69.53.75. And I've told you before, we had an all-time high in an overnight session, and we will fulfill Ras Al Ghul's destiny and repair it at some point at 69.53.75. And my guess is that could be within days. Certainly, I would think before the end of the year. So, yeah, the Bulls are back in charge, at least for now. That could always change. We remain fluid and dynamic in this market. And we had talked today, I had a few people messaging me in the last, oh, come on, even yesterday, where we talked about the pullback after the open. Come on. Let's go. And I had said as long as the 200 MA 30-minute held, it was fine. So we checked back very close to it. I think the Qs actually checked back perfectly to it here and bounced. So, and that was in today's RTH session. So what now? Well, the Qs are lagging. You can see the breadth here. By the way, the breadth is really very poor on this rally. A little over 2-to-1 positive on the NYSE. It was negative on the Nasdaq, and some of that may have had to do with CoreWeave and the impact of the selling and SoftBank. Ticks were kind of middling, a little bit bullish toward the end of the day with more closes over the zero line. Not really that impressive, and the VIX, of course, still hugging this support level. Low of day was like right to the range low. So what now? Obviously, on both sets of futures, the 200 MA 30-minute is a must-hold. The ES, it's currently 68.09 and rising. That'll probably wind up being close to the 68.51 if we get a test there. The Qs are a little weaker at 25,502 because there is no 95. And I do think that this 25,853 up to 25,880 could see some selling resistance if we get up there. We may overshoot it a little, but stay on guard for a look above and fail. Remember in the ES, we got it and then pulled back first. Stalled actually at the open, and then it was just up and away. So, yeah. Qs, obviously, the all-time highs would be in play somewhere between 26,274 and 26,399. But they've got to clear the 25,853 and hold feist. Let's talk about SPY. First and foremost, expected move, $7.16. Max pain pin is 675, bookended by 675 and 675. So it seems to me that that has normalized and there is some put protection on. And they're thinking possibly a pullback here to the 50% fib. Now, let's talk about what happened the last few sessions. Number one, Friday. We came down. I had said a move below and back over the 50 MA was a long. So we should have been longed up at least into the close on Friday. Anyway, we had a gap up. It held, and it was a gap and go. We broke trend. And then Tuesday, we pulled back to the 61.8 at 678.81. We held the 10 MA, and then we went right up to the 78.6. So we go from level to level very quickly. We are a little over the high in the overnight, but we did, however, fill the 11.3 gap fill at 683.34. So we can now cross that off our list. The gap was filled. We are actually a little over the Fed day low. So that to me now is the must hold. The 682.87. I think you could use that as a stop. Anything below, and that's roughly where the close was. So anything below there starts getting a little more dicey. As far as where we can rally to, 685.95 would be my first really big test between there and like 685.80. Okay. The presumption here is that we may rally right up to the channel high at 692, and depending on how long it takes with all the chop and all the BS, would it get us to the 700 level? I kind of think we might get there, but it may be into the end of the year or early next year. That's what I'm thinking because of like the January effect. But would it surprise me if we just go full, as far as Tropic Thunder, you never go full retard. Are we going to go full retard for the highs? It's very possible. So long story short, if you're longed up, don't let it get below the 10 MA because that was the resistance and it has now acted as the support. This would be your trigger for the short, by the way, below the 679.12 to 678.81. Below there, I think we do pull back to 675s and maybe fill in this gap here. Wouldn't it be funny? That's often how it works. I was actually planning on saying this in the video tonight, but we filled one gap to the upside here, the 11.3. Now we have a gap to fill on the downside at 670.97. Now, what would cause that? Well, there could be a few things. One could be let me just fill this in properly, 670.97. The Supreme Court not ruling positively for the tariffs, even though we know the administration has some alternate plans to keep the tariffs, but the headline will trigger the algos and the people who aren't aware of these things. There are some. Don't underestimate how that can sometimes play out. So that could happen. We filled one gap, we come down to the next. By the way, get rid of this gap. We don't need this stinking gap no more. We filled the 1024. We don't need that gap anymore. So all the gaps are filled. All the gaps are filled, except the one below. So this would be the big downside target if you want to do some 1/2 put ratios targeting that, or with an undercut at the 50 MA again. I don't mind that. So could we go a little higher first? It seems like we are, at least in the overnight session. I do ultimately think that the all-time high will be retested and cleared because the real all-time high, as I've told you in the futures, is in an overnight session. But maybe we get another up day, maybe we get the move down. I do ultimately think that gap will fill. I just don't know exactly the order of operations, but keep that on your radar. The DIA, this was a pure as the driven snow channel play. It's interesting to me that this couldn't even fully get the 50 MA or the channel, and now we're back up to the highs. So would this be half-cock slingshot theory? That's a little tough. I think it is actually bullish in this instance because we were coming from an all-time high, and they stepped in to buy it ahead of the 50 MA. Everyone who was waiting for the channel low and the 50 MA missed out, and they have to chase it up now. So, yeah, I think we're going a little higher. Maybe we're going to look for DIA 500 at some point, but the bad news is we are near the channel high, so you probably want to start selling into the 480s and 481s. The expected move there is $4.63. The max pain pin is 471, so that's way, way down. IWM. Now, I don't make that much of these max pain pins, at least not yet, but I am cognizant of them, and I think that protection is in, which is good, but do keep in mind that we may eventually get there. The IWM, $3.88. The max pain pin is 242, bookended by 243 and 243. IWM needs to get over and stay over 244.98 to 247.18. Anything below there to me is just conversation with chop. We had a look below and fail of the 1010 range low. Technically, we should get up to that range high at 246.89, but we are a little weaker. So IWM, I'm not a huge fan of it. I have to tell you, it's just one of those, it's like looking for meaning in a Pauly Shore movie. Now, a few things to deep cut from Clueless, by the way. The Qs, $9.48, max pain pin 620, bookended at 619 and 620. This did what it was supposed to do. It got down to the channel low, looked below and failed at the 50 MA, and bazoom back up. So we're still, however, first of all, we didn't fill the 11.3 gap. This, by the way, I am going to set an alert here, because once this gap fills, I think the SPY will probably wind up falling apart and people won't realize why. So last at or above gap, book gains. Maybe try short. I need to see what the internals are like that day. If it's like 9 or 11 to 1 positive, I'm not going to F around and find out. But if we have those measly internals like we have today, where the NASDAQ is like still negative, yeah, I'll give it a whirl. So we're caught between the 10 and 20 MA. Below the 20 MA at 617.75 could be a right or right out short. Anything over the 10 MA at 623.17, which we are currently, could continue to float up to fill in the 11.3 gap to 632.08. Moving right along. SMH. Now, what's a bath without bubbles, right? Deep cut, back to school. Bulls here need to clear the 10 MA at 358.28. Apple really kind of took the market on its back today and was like, and Google, and was like, yo, what's up? And Netflix too, which I think will be bullish into the split, but we'll talk about that in a minute. The SMH is okay as long as it stays above 348.53. If it, well, yeah, yeah, but I guess the gap here was already filled. We don't really need that anymore. Get rid of that stinking gap fill. So as long as it's above the breakout, it's fine. I'd feel better over the 10MA. That's what the Mobros need for still higher prices, 358.28. And I had said to book it, by the way, at 369.57. Yes, I am cognizant we overshot it a little bit. It sometimes happens like that, but I'm sure you were thrilled if that happened. If you want to do some kind of 1/2 put ratio or a 1/1/1 by 20MA, 355 or 350, sell 330, overwrite down here at 310, basically 20, 50, 100. It's one of my favorite trade setups, by the way. Now, NVIDIA. I told you I would show you where I think Masa and Co. were selling, and I think it was down here. Why? Because NVIDIA looked like it was trying to rally, and it just couldn't, and here is when the selling ended, and it was up, and away. So this is where I think they may have been sellers, possibly on 1010, and then those subsequent days afterward. And maybe here, this could have been more, like they waited for the rally, and then this was the final liquidation. Now, this got schmacked up today, and anything below 195.62, which was the 1010 high, and the 10MA at 198.16 remains iffy. Now, the 20MA is the must hold, 191.58. If that fails, I think we are going to come right back down and retest the 182.45 to 184.47 level, which was our key breakout zone. And then we're going to start talking about head and shoulders. Right now, are we building out a right shoulder? It's still to be determined, but super simple, short below 20MA, neutral to bullish above it, more bullish over 195.62, and then very bullish back over 10MA for a retest probably of 204s. AVGO, Broadcom, whatever you want to call it. This was good, held the channel, bounced. It's got to hold the 50MA and get over the 10MA. So the 10MA is 362.09, 50MA is 347.20. Keep it simple, silly. Or keep it simple, stupid, whatever you want to call it. Palantir, we had this dump after earnings, and now we have a dubstep setup. So what now? Anything over this 1110 high at 194.93, I think could fill in this gap. Anything below the 20MA is probably a short at 186.78, probably for a retest of the 50MA at 179.15. We do seem to be respecting the channel in the old highs. If you were not fast enough to get out and you were kind of soiling your drawers down here, I would book some 190 plus. Just saying, just saying. Now, Apple is a phenom. Very bullish, and I think this is going similar to ISRG back to the after hours high at 285. So that's where I think this could be going in the coming days. So if you want to play for that, I don't mind doing that, particularly with down opens. That makes some sense to me. Don't let it get below the channel. If you want to use 270, that's fine. Don't let it get below 270 on you. Now, ISRG, I've told you, I think that this is actually a stealth AI play, but I had mentioned that I thought we would get back to the after hours earnings highs in recent videos. We did. Mazel tov, book the gains. Do not let it get below 568.69 on you now. That to me would be not so good. As Martha Stewart said, not a good thing. If we pull back the 543.04, basically if we stall at the 78.6, we could pull back to the 61.8. If the bulls can get their gumption and stay over 575.13, 616 is in the potential upside area. I ultimately think this could be event for the $1,000 club, but that might be a while away. The googliness, new all-time high. Anything over 290.86, I think keeps the 300s. And if we went to the channel high here, 305 in play. So, yeah, I am still bullish the googliness. And I had said I thought that this was acting really well. I mean, we never even tested the 20MA, and we were just like barely playing footsie with the 10MA. Still looks good to me, this Google. Very impressive, by the way, the stock. Meta, on the opposite. Remember, they usually go the opposite way on their earnings, and this was a gap and go down. We did, however, get the 61.8. We bounced where we should, roughly to the 50% fib, even stalled a little shy of there, which isn't so hot. I think there could be a rally back up to 690.51, but that's probably where you want to sell it. This to me looks like a bit of a complex top. I would be very interested in buying the dip if this got down probably somewhere between 528.24 and 547.52. This to me looks a little steep, and my guess is what's going to happen now is this won't be the channel, and we're going to form some new down channel, because that's what Meta always seems to do. Will it get a rally into the end of the year? It's possible. What I'm worried about, though, and I want to see if this... Look, I don't mind trading it, but what I'm worried about is that we're going to get into one of these patterns where we're down a lot, and God forbid, maybe into one of these patterns where it was a gap, a rally, and then it was just down, 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 down. I don't know if we're going to go all the way, have a 90% or whatever, 77% correction. I don't think that, actually, but I would not surprise me to see this fill in a little more gappage, probably after a little rallyage. So probably a little more up before down. Microsoft, this has been a range play. We got to the range high, we pulled back to the range low. Now we're getting back kind of mid-range. 38.2 would be 516.47. 50% fib would be 523.91. And the 61.8 would be 531.35. Just keep trailing up stops to prior day's lows. If you're currently long, 502.35 would be that stop. Oracle. All right, so everyone's very worried about Oracle now all of a sudden. Also one of these gap and craps. It's been in this down kind of move. It's pretty close to the where this broke out from. If you want to do some kind of 1/2 put ratio, playing for a retest of 198, I don't mind doing that. If you want to play for a bounce, I think this 271 is going to be rock solid resistance for a while. So that would be the call spread played for the upside. Netflix, this is one of the new split bros. So it looks to me like they're trying to rally this. They have the big split coming up. I wouldn't fade it ahead of that. That's on the 17th. So the stock probably starts to percolate up, maybe even to the 100 MA at 1204.77. But yeah, it's interesting. I just don't love that they didn't announce that on their earnings call. I am very excited for the new Stranger Things series, though, the final season. And Netflix is, I mean, we're into the winter season. It's Netflix season. So we are testing. Look, this was the breakdown area between 1134 and 1141.71. So it seems to me like they're trying for a W pattern, which is bullish. So short-term bullish on Netflix. CMG, by the way, was one of those former split bros when they did this 50-1, and that was the high. That was when the stock was still $69, and now the stock is, drumroll please, $29. I said down in the 29s and 26s. I like buying the dip. So yeah, maybe do so. Look, it's all these stocks. I mean, I was shocked when I looked at Wendy's stock, which is at $8. I mean, it's all these chains. I mean, just look across the board. All these chains are getting creamed. Shack was another one. Smash OLED. I do like that kind of near anchor VWAP around 86 if you want to sell some OTM puttage, although I don't know that the downage is finishedaged. But yeah, I don't mind selling some OTM footage on this, or maybe buying some kind of call spread for a retest of like 100 or 105. But yeah, all these stocks are just food stocks have been getting creamed. Picking bottoms is tough, but Chipotle, it's one of the better ones. Although the one by me is definitely not. And same for Shack, actually. The quality of the place has definitely gone downhill recently. I have to have a little chat with them. Shack in particular. Amazon. So we're respecting the channel high. We're into like the Prime Day or Black Friday kind of sales. We already had the Prime Day, which then I told you the numbers were good. That's why the earnings, the stock gapped up. We pulled back. We retested the breakout. This 238.85, anything over 242.52 is still fine, but we do seem to be respecting the channel. This could actually be like a strangle play, but I still think there's upward drift if the market is bullish. AbbVie, I don't really have a very big feeling on this stock. I do like trimming here. Don't let it, I mean, if you want to short it, wait for a break of the 10 MA. 219.81. That's the must hold, or it's a short, because that had been resistance. Now, I mean, could we float up to the highs? It's possible. But, I do think that if we gap down, we're filling the gap here. So anything between 226.41 to 228.20 is probably a good opportunity to book gains, or at least some, if you bought the dip. This Dave, I don't really know that much about them except they're extra cash, right? They do the paycheck. This is for like lower income and stuff. I would imagine the crackdown in the illegal immigration probably has hurt these guys, but the stock is, I mean, I think it bottomed at like $4 back in the 2022 crash. Yeah, $4.47. As of now, I think you could be long as the 50 MA-ish area holds. So, we got through earnings. The stock was sort of a pop and flop, and it's just chopping around. Shorter term, if you want to use the 20 MA at 233.41, but that might be cutting it a little too tight. 194.06, as long as that holds, that area is fine, I think. Calm. Also, we recently talked about this. This just looks like an accumulation channel at this point. The 78.6 probably still a good area to trim at 17.62. Channel high is 18.27. I'd probably buy the dip a little lower. But yeah, it does look like it's still trending higher. UNH. All right, so we hit the gap fill, which was obviously a profit-taking opportunity, and now we pulled back to support, which is the 100 MA, and then this area here at 322.62. We had hit it on the bounce on 520. We hit it again here on 7.1. We were above it for a while, and now we pulled back to it. So I think UNH could continue bouncing. Just don't let it get below the 100 MA on you at 317.35. So this was obviously some bookage. This was the bookage on the shortage. If it does have another leg lower, somewhere between 300 and 294.71, I mean, I don't know that we're going to fill the 271.49 gap anytime soon, but their earnings were fine, and it seems to me like this is going to be accumulated. I mean, Warren Buffett was buying into it, so maybe he bought some more shares here. Nike also, it's interesting. They've had a couple of good earnings that have popped and flopped it, floppeted. This area was my buy the dip zone between 58 and 59. As far as resistance, maybe the 20 MA at 65.52. You're about to get a bit of a death cross, but I don't know that I make that much of it. I think there was a note today from Bank of America reiterating their $84 price target. Yeah, I mean, it's toward the lower end of the range. I mean, I'd probably rather own it down here than be short it. Maybe if they rally it into the numbers, that could be a short, but definitely, if I had to gun to head here, rather be long than short at the moment. This MongoDB dubstep situation, if you're long, I think 363.28 low of day is as good a stop as any. Channel high here would be 385.82. Again, another accumulation funnel. I'd probably be a 50 MA buyer on dips at 330.32. Have a great, the upside target here would be the 417s to 428s if we do kind of blow our brains out. Have a great rest of your week. I'll see you for the weekend video, late night Friday, early morning Saturday. Cheers.